What's going on, everyone? 76% of the S&P 500 closed up in the green today, but it wasn't all sunshine and rainbows as we saw a decent amount of selling pressure, especially with big tech stocks, and the market is really on edge right now as everyone is looking and waiting for the giant CPI inflation data report set to release 1 hour before the market opens tomorrow. This will be the biggest event to start off 2025, and there is a lot to know going into this. So in today's video, we're going to cover everything you have to know and some also good setups to keep on the radar. And we also have 2 big money trades today. So make sure to stick with us all the way until the end. But besides that, Tom, let's get right to it.
Yeah, I guess we'll just kick it right off because the inflation data tomorrow is definitely the best thing, Mike, and we'll definitely start off with that today because everybody's asking themselves, hey, if this data comes in hotter than expected, what's going to happen? If inflation ends up rising by a lot, will that be a bad thing for the market because of how the Federal Reserve is? Well, we will answer some of these questions, but let's kind of go over here, Mike, just originally what time this will start. So 8:30 a.m. Eastern time is really whenever all this CPI data will be coming out. So be ready for that. It's 1 hour before the market opens. And of course, we've been talking about some of these forecasts and consensuses with this data. It looks like they're looking with a pretty big jump with inflation, Mike. I mean, with the year-over-year rate, they're looking for it to go from like 2.7% up to 2.9%. And we actually have a lot of good forecasts here from a lot of the big banks, and almost all of them, well, all of them are actually, at least on this list, looking for an increase.
Exactly, and that says a lot, and this is a lot more important than most people realize because the war against inflation has still not been complete. Basically, there's a big risk to the market right now where if we see inflation rise in a big way, that can cause some very serious problems, and this is part of the reason that the market has been freaking out a little bit in the short term. So basically, what's going to happen tomorrow is we are going to get the new updated inflation data, and if it comes in hotter or greater than what everyone's expecting, then that will be a big problem. Like Tom said, everyone's kind of expecting it to come in around like 2.9% right now. Some are expecting as high as like 3.3% and some even lower. But the main thing you have to know is that if we see inflation data come in like especially over 3.0%, that will not be a good sign at all. And that will present a major risk to the market. Some things that are important to keep in mind is that if inflation data does come in stronger than expected, that would really kind of throw off the Federal Reserve because as we can see by looking at the CME FedWatch tool, we can see for 2025, there is currently 1 interest rate cut scheduled, and that's set to happen towards the end of July. Basically, if this inflation data comes in stronger than expected, we might not see any interest rate cuts at all, and maybe even some hikes, which is something the market definitely doesn't want to see. So to put it simply, tomorrow's data is extremely important.
Yeah, and if we see let's say that 3% reading or more, there might be a lot of people now starting to call for hikes, and that could start to really shift some of the sentiment because a lot of this year's, or I shouldn't say this year anymore, a lot of 2024's price action, at least out of SPY or the SPX, was attributed to all the rate cuts coming in 2025, right? And now they just keep revising it and drawing them back, and obviously the market has not been liking that, and the market has been in a pretty bad downtrend since the Federal Reserve indicated less cuts on their December 18th meeting. So that was a big deal, and if this kind of solidifies that, this could be a bad sign in the short term for the market. Now, a lot of people out there, Mike, are asking themselves, well, hey, what if it comes in just right at expectations? The market's been weak recently. Does that mean that, the market will drop? I personally lean to the downside on this event, but obviously these events get pretty crazy and the market is irrational, right? Traders are irrational. And I think that the reaction to this could also end up being irrational. So, so tomorrow I'm definitely an open book, so to say. I will definitely adapt after we see that initial pre-market move.
That's the thing. Like, if we see the data come in a lot hotter than expected, generally speaking, the market will fall. But if we see the data come in, closer to expectations, that would generally be thought of as a bullish thing for the market. But like you said, at the end of the day, you just have to adapt to, how the market is moving. Sometimes the market moves in ways that, just doesn't make sense. And, instead of trying to specifically calculate exactly what should happen, it's more about reacting to what is happening. So basically, with tomorrow, understand it will be a volatile, strong day. Follow the money, protect yourself, and constantly adapt to how the market is moving. One thing that I think is certainly worth visiting again is what is happening with yields right now. This is what everyone's talking about, and when we look at the US 10-year yield, it is still very close to that scary 5% mark. So basically, interest rates have been rising in a pretty rapid way in the short term. This is not only bad for stocks, but it also makes mortgages and all other interest rates higher, which is not necessarily a good thing, at least in like in a bullish sense. So basically, everyone's paying attention to to yields right now, and they're still running, and this is generally a bad thing for stocks. If you look at ticker symbol IEF, you can kind of follow this movement in like a tradable stock form, where the more IEF falls, the higher interest rates are rising.
Yeah, I'm honestly hoping, Mike, that whenever we go back to the US 10Y, that as we get towards 5%, that ends up becoming another peak for us here. Because if we start to see a huge break with the 10-year yield above 5%, that will definitely be a negative in the short term, in my opinion. And hopefully the data tomorrow helps maybe start more of a downtrend with US 10Y. But based off of the way that they're expecting inflation to jump, I'm kind of thinking it won't.
Yeah, so we shall see. But another thing that we cannot ignore is what's going on with big tech stocks right now. So especially when we look at the heat map, like we covered in the beginning of the video, 76% of the S&P 500 closed up in the green, but the stocks that matter the most, which are big tech stocks, so you could say stocks like Nvidia, Google, Meta, Apple, Microsoft, Tesla, and a handful of other ones, actually closed down in the red. And I think this is a pretty concerning sign because what big tech stocks do not only directly influence the market more than anything else, but they also go hand in hand with investor sentiment. So as we see like profit taking with big tech stocks, it's not something you want to see heading into a major economic event.
Yeah, definitely not. And a lot of these had some negative news today. I saw Microsoft had some negative news with some job cuts there. Even Meta had some pretty bad headlines, like they're announcing a 5% cut. Now, there is some obviously internal memos, like Zuckerberg. I thought it was kind of cool how he's like, it's a decision like to move low performers out faster. I think that's a good thing. But at the end of the day, any type of job cuts is definitely going to cause like a big stir in your business. And watching these tech stocks fall today, a couple of these, obviously like Meta and Microsoft and others, were definitely down in the red by a good amount. I would say most notably Meta, Tesla, and even LLY, in the healthcare sector was even down a lot too, down 6.5%. That really kind of fueled that downtrend today. So definitely have your eyes on those tomorrow in pre-market. For example, if we start to see the SPY running down and Nvidia's having a clear break below like this major 130 support from this week, that's going to be a terrible sign. So have your eyes on some of these key supports with these tech stocks, because there could be great intraday opportunities as these start to give out potentially, or even if there's bounces. But of course, with the inflation data, you have to have your mind open to all situations here.
No doubt. The main thing is that they should move in some pretty strong ways in the short term. Of course, if they do break these recent support levels, that can be a great indication for some like short-term bearish trades. And of course, depending on if the data comes out in a strong bullish way tomorrow, then the same thing applies, but just in a bullish way for these big tech stocks. But looking more at SPY right now, Tom, what are the key levels and analysis to pay attention to heading into tomorrow's event?
Yeah, I really like the low from this week here as a key support right around 575. That is going to be the most crucial area that I am watching tomorrow. There is a very crucial support as well right around the low of day from today. There was a lot of price action around 578.50 to 580. This had a ton of bounces, and even over the past couple of days on Friday even, there was a lot of bounces around this range. So that's going to be another key support that I'm watching before we get to 575. As far as resistance goes, where SPY got to this morning, up around 586, is pretty crucial. So I really like 585 to 586 over the past couple of days as major resistance. We even saw a 585 touch and drop with SPY there this morning. I think in the short term, especially with the data tomorrow, seeing like a clear break of this will be the main thing to look for. Once we get a clear break of that range, I really think that the key 590 resistance overhead will be the main resistance to watch for. And of course, to the downside, I really do like that 575 support, but I would really watch the whole dollar level at 570 once we break below that 575 mark, if that's, the move that ends up playing out. But right now, the SPY is kind of stuck in this range. And like I said yesterday, expect a lot of chop into the event. And that's actually what we kind of saw a lot today.
No doubt, and I definitely agree with that key area being that 575 level. That was a crucial support yesterday in pre-market, and if we do see a break below that, that would be a nasty sign. So either way, let's keep an extra close eye on that. But Tom, we also can't forget that earnings season is ramping back up again. So what does the schedule look like?
Yeah, tomorrow morning, we're going to have all this economic data, the inflation data, of course, but as well, we're going to have big banks reporting. So it's going to be a pretty crazy morning. If you had to pick one day to wake up early, tomorrow's probably the one. But JP Morgan, Citigroup, Wells Fargo, and BlackRock, all in pre-market tomorrow. Definitely be ready for that. Of course, Thursday, there's even more banks and Taiwan Semiconductors in pre-market as well. But for tomorrow, it's going to be a crazy one, Mike. And I know that we already went over the economic calendar, but I'll flash it up again. Of course, the inflation data 1 hour before market open tomorrow. And then, of course, Thursday, we have the retail sales. And then Friday, building permits and housing starts.
Beautiful. All right, well, let's get right into some setups and predictions then. A stock that is definitely close on my radar is Meta, and it is to the downside. So Meta is actually the fifth heaviest weighted company in the entire S&P 500, and it fell by a little bit over 2% today. Like you said, Tom, they had that news with cutting off around 5% of their workforce, but the stock has been relatively weak in the short term. I'm seeing some pretty important support right around 590, 588, 585, 583, and 580, which are all pretty close to the stock right now. Not only is the stock weakening in the short term, but of course we are seeing just broader profit taking in general, which definitely helps the bear thesis on the stock. There is strong resistance at 600 and 605, but either way, Meta is definitely on my bearish radar in the short term. I think this weakness is something that shouldn't be ignored. And as always, with any important major economic events like we have tomorrow before open, obviously if the market is just blasting to the upside, it makes it a lot harder to justify playing Meta or basically anything else to the downside.
Yeah, definitely. I'll say that about both of my plays as well. And with my first play here in the short term, I'm looking at Ford back to the upside, actually. Now, this is a pretty crazy setup here. Ford on the daily chart has fallen back down to a major level right around $9.50. It's starting to double bottom a bit more on the daily, and I will be looking for a bit more of a pop back up. Now, I will say Ford doesn't have the highest correlation to SPY, and that's a good thing. It might move it with more of a mind of its own, and it might not care as much about, like, let's say the inflation data tomorrow. But overall, for the next few days, I'm really watching for this support to hold, and I'm definitely looking at it back to the upside. But I will say, if the market surprises me and Ford ends up breaking this down, then definitely have a willingness to adapt to the downside here, or obviously have a stop loss around this $9.50 area. But I really wanted to highlight this support because it's major, and Ford has had some pretty insane moves off of this before.
There we go, and definitely make sure to stick with us towards the end of the video because we do have more to talk about with this one. Hint, hint, big money play. But with the next stock, I'm looking at GLD in a bullish way. Basically, when we have big inflation reports, gold prices can move in a pretty big way depending on how the data comes in. GLD did have a pretty good day today, and it has been holding its ground pretty strongly. We could see right now it's trading for right around like $247 a share, and it has some strong support at $245.50, $245 and $244, with resistance closer to 247, 247.50, and then 248, and even 248.50 and 249. So basically, GLD is uptrending in a pretty strong way right now. It does have a handful of important levels, but the main thing that is driving this as a potential play is tomorrow's economic event. Again, depending on how the data comes in, it can certainly move gold prices in a pretty strong way. So either way, GLD is definitely on my bullish radar.
Yeah, and gold is moving up today ahead of the event. Maybe there was a little bit of fear there, and maybe people were buying up gold into this, and I don't blame them because, you know, with an expectation with inflation to jump a little bit is definitely a bit of a worry in my book. I will definitely be watching gold and, of course, all the metals. With my next setup, I'm looking at Amazon to the downside. They've had a pretty bad move in the short term, and I definitely like a support that they have right around the 215 area. If they end up breaking under 215, I'll be watching them back down. This is right around a peak from the past, more specifically in the beginning of November of 2024. This is like where they peaked out at. On the Bookmap, there's a lot of buyers stacked up at this 215 spot, 59,000 shares to be more specific there. And if we do see that 215 mark breakdown, that's where I will become a bit more bearish tomorrow. But like Mike has said with his plays, of course, the economic data plays a big role, especially on these bigger tech stocks like Amazon. So if the data comes in and the market's moving higher, then obviously don't look at Amazon down. But if we're seeing a good break of 215, then definitely be a little bit advantageous with it.
Alrighty, so yeah, there's definitely a handful of buyers stacked up at that 215 level. We can see there's over 57,000 shares already stacked up, and I wouldn't be surprised if that number grew as the stock got closer to that level. But either way, I will definitely keep this stock on the radar as well. But besides that, Tom, it is now about that time for today's momentum plays. And with the first one, we have RGTI to the upside.
Rigetti with a huge recovery day today, up 47%. These stocks are insane, Mike, but if Rigetti ends up breaking above $9.30, where it peaked out at in after hours, then watch it to the upside. If it breaks above this in pre-market or after hours, then maybe just watch $10 above there.
Sounds good. A stock like RGTI is extremely volatile, and this is definitely best for scalping, which are like super short-term trades. So definitely keep that in mind. But another stock that is on the radar is PayPal, also to the upside.
Yeah, PayPal, pretty good day today. If they can break out above $87.50, then keep watching them up. That's just above their high in after hours here.
All right, and then with the last one, we have AAL, also to the upside.
American Airlines. Yeah, the airlines actually picked up a lot of steam today, and if American Airlines can break above 1825, right around where it's double topping today, then keep watching it to the upside for tomorrow.
All right, so we have AAL, PayPal, and RGTI on watch for potential momentum plays up tomorrow. Basically, the stronger and more consistent these stocks move, the better these setups become. These stocks are volatile, so you have to be happy to adjust and flow with the trend changes as they happen and protect yourself like with any other trade. Have a stop loss and have a trade plan. Don't just enter into a trade and cross your fingers and hope for the best, because doing that is certainly not good, to put it simply. But either way, keep a close eye on these stocks heading into tomorrow. And let's jump right into today's two big money plays. With the first one, we are looking at ticker symbol MTCH, where the big money put $825,000 into the $32.50 strike call options that expire on March 21st of 2025. Looking at MTCH, the stock has been in like a chop zone over the past couple of months, and it has been holding this $30 area of support in a pretty strong way. Basically, MTCH moves by itself as it has like a negative 0.12 correlation to SPY, so just moves by itself. It does have some pretty close resistance at like that $32.50 to $32.75 area, as well as like $34 and $34.80. But either way, these call options are pretty close to the money, and they have a fair bit of time to them, so it'll definitely be interesting to see how this one ends up performing.
Yeah, what a crazy stock, right? And for those of you that don't know what this is, Match is obvious. They own a lot of different dating sites, right? So that'll be a pretty insane, I guess, move, right? Back to the upside here. But I do like the $30 support. It's a pretty insane company, and they do gap up and down every once in a while and end up trending in a pretty good way. And if they end up bouncing off this support, and maybe filling that gap back up towards like 35.50 to 36. I will definitely be watching for that. And I really like that they're more towards like the end of or bottom of their range rather than the top. This range has actually been pretty huge here over the past couple of years.
Yeah, no doubt. I also like how it kind of like moves by itself. You know, if this was a stock that moved in like a one-to-one way with the market, I wouldn't be as like big of a fan with it because, you know, there's a lot of market risk right now, but it is nice to, you know, have some stocks that, you know, just move independently. So that's good, and definitely keep this one close on watch. But with our second big money play today, we are looking at Ford, and this is a $996,000 trade where the trader bought the 8 strike call options that expire on December 18th of 2026. So these options have a ton of time to them, but it looks like they are buying this dip that Ford is in. Basically, Ford has been slowly and consistently selling off ever since the beginning of 2022, and it basically has a pretty strong support level right around like this like $9.40 to like $9.50 area, as well as $9. Basically, resistance is closer to $10, $10.70, and like $11. And it looks like the big money is just like buying this broader dip right here, considering that these options are pretty far in the money and they have almost 2 years worth of time to them. So I'm very interested to see how this play ends up turning out. I do like how deep in the money the options are, and I also like how the big money is buying in now where, you know, the stock is pretty depressed.
Yeah, and I would say that makes for a great risk-reward ratio in the short term. I know you mentioned $9. You know, that might be a little far away for some people, maybe not, you know, depending on how you end up setting up the trade. But I would say, you know, this recent low and support right around $9.50 is huge. Like I said before, I love using that as a support in the short term. I will say, though, they have a ton of time on this. I mean, like you said, 2026, and it's December of 2026 as well. So pretty much like almost as far out as they can get, but it's pretty insane to say, Mike, that that's a lot of time. So if you do follow the big money on this one, definitely give the play the time that it needs, right? This will probably fluctuate around for a little while, and who knows, you know, throughout maybe the end of 2025 will maybe be when this starts to really come to fruition. But either way, in the short term, I love support, and I do think that the risk reward ratio could be good. And even if you didn't want to hold it for like 2 years, you know, you might be able to follow the big money and, like, let's say, have the thesis that they're looking for, you know, more of like, let's say, a multi-month move higher, let's say, rather than just like a 1 week run up. So like, you don't have to necessarily follow the big money directly every single time, although of course it's recommended.
Yep, so either way, keep a close eye on Ford going forward. But before we move on, we have to give a giant shout out to today's member of the day, Crapman in the stocked up trading floor, who had quite the recovery. So he definitely had a rough day yesterday, but bounced back in a major, major way, as we could see by the screenshots posted. So huge shout out to you, and it's awesome to see gains like this one. So great stuff here, and keep on rolling. But yeah, as we look at tomorrow, there is a lot laying in the market's hands, we'll say. The CPI data should not be underestimated. This will be more important than most people think, and this event will have a big influence on what the market does for weeks to come. Basically, 1 hour before market open is when the show starts, so consider waking up early tomorrow. There is a lot that will happen. Also, if you guys are new to the channel, consider obliterating that subscribe button. We cover the most important news, information, big money plays, earnings, setups, and everything you have to know about the market every single day. So if you subscribe, you'll get our videos recommended to you more often. And as the market is continuing to get more and more volatile, Bookmap really shines. So basically, if you guys have not used Bookmap already, definitely check out that first link in the description in the comments down below. Bookmap basically shows you where all of the key pivotal levels for any stock are at. We could see with Amazon, we showed the giant buy wall right around $215 a share, but you could basically see exactly where buyers and sellers are stacked up at and trade off of those levels. Stocked up viewers do save if you use the link down below, so definitely check that out. It becomes even more valuable in times of increasing market volatility. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.